Hi, my name is Keone. Welcome back. So I've been trading for a long time. One of the good habits I pick up is waking up like 5:36 in the morning to trade the New York market open. Then waking up early is really giving me this good chunk of personal time for myself and to just do trading. And so I used to trade from 6 a.m. to maybe 10, 11 a.m. But things change a little bit after my daughter is born. And so for those you have a kid, you will understand, just like you will never know when your kid will wake up. And so you just have to be there for them. And so that makes my morning trading routines a little bit difficult. And last week, one of the trading day, I have to kind of step away from the computer for a little bit. So before I step away, one of the trade is 10 points away from my take profit. So let me just show you on the chart like exactly like what I was facing. So this is the trade I placed today. So the market was go up, test the resistance, and after test the resistance, come back down and create a lower high. And so I enter somewhere right here, and so you can see the market go all the way down. That's about 10 points away from my take profit, and then market just rally back to the daily open. So this is kind of just raised a question I kind of want to ask you. When the market 10 pips away from your profit, would you take profit like early before the market hit your take profit, or you stick with your plan and just like wait for the market to hit your take profit? Just let me know down below and we can talk more about these questions. So what do you think? Should I just stick with my original plan and let the trade play out, or should I just get out of the trade when the market close to my take profit? So it didn't take me too long for came out with my own answer regarding to this question. So I think you should stick with your trading plan. But I'm not saying just like you can never get out of the trade early. But there's a key, just like if you have the rules to get out of the trade early. So for the trade I showed you earlier, so if I get out of the trade just because there's some emergency, you have to go, and it's 10 pips away, and if I get out, that's not in my plan. So if I get out of the trade, I'm not really trading my plan. So what I'm trying to say is like with the proper rules, and you can get out of the trade early. So as a human being, we are really easy to not following the rules. To be consistent profitable in this inconsistent market, we need to have a consistent rules. And so if we keep breaking the rules just because just like it's convenience, and it will be hard to follow the rules. So that kind of just like bring me to the next point. It's about the consequence, because a lot of times just like when we trading, just like we are making decision, and oftentimes people got like a stock into a trade or they blow up their account. Oftentimes is that they are not accepting the consequence when they're making the decision. So like the example we will talk about earlier, if the price is only 10 pips away from my take profit, if I decide to stay in the trade and just let the market play out, there's two things will happen. The market will just continue going and just hit my take profit, happy ending. But there's also a chance the market will reverse and eat out my profit and even just like stop me out with the loss. Before I walk away, just like that's the decision I have to make. If the market reverse and stop me out, am I okay with it? If the answer is yes, then you just go ahead and just walk away and just let the market play out. If not, and maybe you should just get out the trade. So next time, if you have a decision you have to make, should you move your stop loss, and should you add more position to your losing trade? A lot of times we focus on if the market play out, or if I move my stop loss and the market might reverse and I don't have to take all the losses, and you might end up making money because you move your stop loss. But in reality, there's a chance that the market will go further more and stop you out, and you will take in more losses. And so are you okay with that, or are you not okay with that? And you have to really ask yourself this question. So after all that, let's get back to the original question. Just like when the market get close to your take profit, it's only like a 10 points. Should you just get out? Should you just stay in? If it's in your plan, and just do it and just exit the trade to follow your trading plan. But if not, I would suggest just don't do it because you don't want to get into that route to just follow your emotion, because if you do that once, then you will do that twice, and before you know it, you will just throw your trading plan out the window. You're not going to follow your trading plan. But instead, just like if this time and you don't have the rules to get out the trade only 10 pips away from your take profit, and and the market reverse stop you out, and you can just go back to kind of just like reassess your plan. Just maybe you should add the rules when the market get close to your take profit and there's a big volume spike and you can get out of the trade. So I'm not saying you just have to stick to your trading plan. You cannot change anything, because I believe trading plan you can modify and make it better. But the fundamental idea of the trading plan is to follow it. It's not to tweak it with your emotion on the spot. So let me know what you think. What will you do with the situation like that? And just comment down below, and I will see you next time. Bye bye.